everyone wants to become wealthy, everyone wants to get rich, and the first thing they do is to put your money in banks, in FDs. Bad idea. Hey guys, welcome back to the channel. If you are new here, my name is Mano. I am a computer science student, and in this channel we discuss tips, strategies, tricks to make your life easier, better and be more productive. So today in this video we'll look into the basics of stock market. What are the things which you need to know before you make your first investment in stocks in the stock market. Before getting into the basics of stock market, let's discuss why you need to invest. What is the need to invest in the first place? There are a lot of external factors that work daily to reduce the value of your money, and one such thing is called inflation. So let me give an example in this way. So you have 2000 rupees note in your pocket right now, and you decide to not spend it and not invest it anywhere and keep it in your pockets for a span of 5 years. And after 5 years, what if I tell you the value of that 2000 rupees note is decreased? It's not actually worth 2000 rupees. In the actual world, you can't buy what you could have bought for 2000 rupees in 5 years ago. You couldn't bought it after 5 years. So the value of that particular 2000 rupees note is decreased. Yes, the number written on that particular note is still 2000, but its value in the actual market, in the actual world, is not equal to 2000. So this is caused due to inflation. Inflation decreases the value of your money, and this is the basic thing. Like, not just inflation, there are other things which work as well to reduce the value of your money. So the one question which comes next is how to beat inflation. The simple answer is invest in some financial instrument which gives high returns, that beats inflation and gives you better returns as well. So there are a few financial instruments which is quite famous for people, where people invest daily, and the few are fixed deposits, which is you go to banks and invest your money, and the second one is stock market, and the third is gold, cryptocurrency. So there are a lot of financial instruments which you can experiment and try out. In this video we'll discuss stock market, stocks in detail, everything which you need to know about stock market. And if you want to know more in detail about what is the need to invest, what are the benefits of investing, other ways to invest, I have made a separate video on that. I will leave that in the cards above, and the link to that video will be in the description as well, so you can feel free to check that out. Also this video will be quite long, and I will leave the timestamps to different sections of the video in the description, in the pinned comments. Feel free to skip through the different sections of the video, and let's start it. If you want to buy fish, you go to fish market. If you want to buy vegetables, you go to vegetable market. In the same way, if you want to buy a part of a company, i.e. the shares of a company, you go to a place called stock market. Unlike the markets which I mentioned earlier, a stock market is a completely digital space. All you need is a digital device like your mobile phone or your laptop, and with a good internet connection to access it. And a stock market is a place where both the buyers and sellers of a particular company shares meet and traded. So yeah, the stock market is a digital space. Awesome. And as you all know, a vegetable market is managed and regulated by a city's municipality or a corporation. In the same way, there needs to be someone who manages and regulates the stock market. So in India, there is a regulator called SEBI, Securities Exchange Board of India. So these guys regulate the whole stock market basis, and they say SEBI has all the details about all the stock like listed companies, details, all the shares. They manage all the shares of the listed companies, and they have the details about the buyers and sellers of every single share of every company. And if a new let's say if your new company wants to get into the share market and they want to get themselves listed there, all they need to get is permission from SEBI. If SEBI didn't give permission, without SEBI's permission, nothing is going to happen. SEBI controls all the stock market activities, and it has higher power in stock market. Now that we know SEBI controls all the stock market actions, whatever is happening in the stock market, everything is controlled by SEBI. And the question we have is right now is, how do we approach SEBI to buy or sell stocks of a particular company? Unfortunately, we can't directly approach SEBI because SEBI has appointed many intermediaries, financial intermediaries, to connect us, investors like us, and SEBI. So SEBI never gives full access to data of shares of a particular company to a stockbroker. So they set up an intermediate called the stock exchange. The stock exchange is the actual place where the buying and selling of shares of a particular company actually happens. And in India there are two famous stock exchanges, important stock exchanges, which is the National Stock Exchange NSE and the Bombay Stock Exchange BSE. So these stock exchanges are trustworthy, and there were many other stock stock exchanges in the past, like Metro Stock Exchange, but due to the low trading volume in those stock exchanges, they were shut down. And there's a fun fact. Bombay Stock Exchange was initiated in 1875 under a banyan tree by a few stockbrokers, and now it's trading over 50,000 points. Now we know SEBI controls all the stock market activities, and SEBI set up an intermediate called the stock exchange where the actual trading of shares, which is buying and selling of shares, happens. And the immediate question comes to our mind is how to approach the stock exchange. And unfortunately, the same answer, we can't approach the stock exchange directly. So what happens is this is where the stockbrokers comes in. Stockbrokers are one of the important players in the stock market field, and they provide you with all the facilities, all the features which you want to buy or sell a share of a particular company. They connect us like we retail investors with the stock exchange, with the SEBI, and helps us buy or sell shares. So a stock broker will provide you with a terminal called the trading terminal, which you can use to analyze the stock, buy or sell the stocks based on your analysis. And you can also phone call your stockbroker and buy or sell your shares. In India, there are many stockbrokers there, like Grow, Zero the Upstocks. Choose your stockbroker wisely. There are many of the players in the market. Now we know that with the help of a stockbroker, we can buy and sell shares of a particular company on the stock exchange. And the next question which comes to our mind is where do these stocks which you bought get stored? And the next question is, when you sell a share, where is the money get back? Where will the money get back to? So these are the two questions. And to initially buy or sell shares of a particular company, you need two different accounts, which is a trading account and a Demat account. Let's discuss one by one. So let's discuss Demat account first. Demat stands for dematerialization. In 1996, Government of India announced everyone to change their physical share certificates into a digital format, and that is where this Demat came from. So a Demat account stores all your shares which you bought of a company, and every share gets to store there. And this Demat account is created and given to you by a depository participant. And in India, there are two depository participants, which is NSDL and CDSL. And now let's come to the next one, which is a trading account. So now we know that a Demat account holds all your shares, but to initially buy your share, or if you sell a share, the money needs to come back to some place, and this place is a trading account. A trading account is all your money management stuff happens in the trading account, and your stockbroker will itself provide you with the trading account. And the interesting part over here is you don't have to approach a stockbroker and depository participant for your trading and Demat account respectively. Your stockbroker operates with interacts and works with depository participant to create both the trading account and Demat account for you, which comes super handy for you. Now you know that a trading account manages all your money in the stock market, helps you with buying and selling shares. But where does this money actually come from? Initially, where does this money actually come from? The simple answer is from your bank account, from your banks. So you need a bank account which needs to be connected to your trading account, so that you can, if you want to buy a share of a particular company, you can take some amount from your bank and put it into the trading account, and using that money in that trading account, you can buy shares of a particular company. And when you sell a share, the money initially comes to the trading account, and from your trading account, you can transfer it back to your banks. So bank account needs to be connected to a trading account, and the trading account needs to be connected to your Demat account. So this is the link over here, and you need all these three accounts to buy and sell shares of a particular company in the stock exchange. There are many factors that moves the price of a stock daily up and down, and the important factors are the company's financials and the emotions of the stock market participants. And usually the emotions are caused by news and fear of missing out, FOMO. So if you are buying or selling a stock, do your own research, do your own analysis. Never blindly trust the news and your friends who are asking you to buy or sell a particular stock. Now that we have covered almost all the basics of a stock market, there are a few details left to cover. The stock exchanges, NSE and BSE, have their own stock index. So this index is made up based on the performance and weightage of a particular stock and that trading in that stock exchange. So the NSE has this thing called Nifty 50, the top 50 companies trading on NSE, and BSE has this thing called Sensex 30, which has all the top companies, which are the top 30 companies that are trading on Bombay Stock Exchange. So these index are one of the best places where you can start your investments, early investments, initial investments can be started here. It's advisable to start your initial investment in this top index companies, and this index is based on a thing called free float market capitalization. I will leave the link in the description where you can check out this free float market capitalization in detail. Awesome, we are in the last section of this video where we discuss some of the jargon terms used in the stock market. And the first term is bull market. When a stock's price is going up, it's called the bull run or a bull market. And when the stock's price is going down, it's called the bear market, bear run, or the bear's dominance, as you can call it. And the next one is 52-week high or 52-week low. And 52-week high, as the name suggests, is the highest point at which the stock has traded, highest price at which the stock has traded in the past 52 weeks. And the 52-week low is the lowest price at which the stock has traded in the past 52 weeks. So the next one is upper circuit and lower circuit. When a stock, the stock exchange basically sets a price band within which the stock price can move during a day. And when the stock price hits the upper limit of the band, it is called the upper circuit, and the stock price cannot move further up. When the stock price reaches the bottom, which is the lower limit of the band, it is called as the lower circuit, and the stock price cannot go further below down. And the last one is OHLC. So OHLC stands for open, high, low, and close. So this terms holds all the data about the open price of the particular stock, highest price at which the stock has traded during that particular day, and the lowest price at which the stock has traded during the particular day. And the last is close, which is the closing price of that particular stock during the particular day. That's it for me today. Remember one thing, everything looks scary from the outside, but once you get into it, it's not that scary. The same goes with stock market as well. When you are an outsider, the stock market looks so scary, but once you start trading in it, start investing in stock market, it's not that scary at all. So thanks so much for watching and sticking till the end of this video. If you want to watch my other videos, you can choose one from here. And if you enjoy this video, if you like this video, consider liking this video and subscribing to the channel. See you guys next one. Bye bye.